Welcome to the 2024 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Friday, October 18, 2024 edition. Please be sure to subscribe to this channel for the latest interpretation of financial news as it becomes available. I appreciate all of your support, ladies and gentlemen, as we continue to deal with this economy in 2024. And ladies and gentlemen, things are better, but they're not better at the same time. Retail sales continue to remain somewhat better, but wealthier Americans, the top 20% of Americans, are driving the retail spending and powering the U.S. economy. This is according to U.S. News and World Report. They're saying that's a trend that surprised many. While despite being squeezed by high prices that we're facing, many Americans kept spending at retail stores and restaurants at a robust pace, quote unquote. So that may be the case, but the thing is that people are spending on necessities and bare necessities and essentials for their family, and they're stocking up on things because they know that every time they come back to the store, whether it's retail, food, gas, utilities, the next month is just going to be a little bit higher, whether that's 10 cents higher or $2 higher. The point is the prices that we were used to 5 or 6 years ago are not coming back down the way that they were. And that's the trend that's going to be continuing here with this economy. And a lot of people are not feeling good about this economy, where it's going, where the job market is going. But the stock market continues to set all-time highs. You know, the Dow Jones is above 43,000. S&P 500 is above 5,800. Everything is surging here. This is the sixth straight week that the Dow Jones has been up above this level. Russell 2000 was up, and so S&P 500 sets record longest weekly win streak of 2024 as Netflix begins to surge here. The stock of Netflix begins to surge. So people are doing a lot of day traders doing a lot of pumping and dumping of these stocks, the cash out shorting of these stocks. Netflix was down for the majority of the year, and now all of a sudden it has surged tremendously here. And the tech-heavy NASDAQ moved up 0.6%, leading gains. The Dow Jones Industrial Average rose another 0.1% after closing a new closing high the day before. So now we're above 43,000, on our way to 50,000 with the Dow Jones. And everything looks to be going up and at a record pace here in terms of Wall Street. But Main Street is continuing here to feel the effects of these higher prices and lower stagnant wages that we're seeing in the job market. Average rate of a 30-year mortgage in the U.S. rises to the highest level in 8 weeks. Once again, it was supposed to be that mortgage rates were supposed to come down because of the rate cut. Remember, we got the 50 basis point rate cut last month by the Federal Reserve. That did not happen. Mortgage rates are actually going up. So we're not looking at a textbook economy here that we've used to be seeing here. You would be cutting rates in a not so booming economy, and you would be raising rates in a booming economy, right? In an economy where everything is clicking, where employment is super high. We don't have that. We have mixed signals here. We have jobless claims that continue to drop after storms in the week prior. So we supposedly have jobless claims jumping. Now, this is probably initial jobless claims, not continuing jobless claims. Remember, continuing jobless claims are rising, but initial jobless claims are dropping. So we have two mixed signals here. We have mortgage rates going up. Even though we're cutting interest rates, the Federal Reserve is in the process of cutting and starting QE again, printing up money, which you think would be lowering everything. Instead, we have the opposite effect. And so that tells you there that the numbers are being doctored up here. The numbers are being fixed up by the Bureau of Labor Statistics here, because you can't have unemployment dropping, but yet mortgage rates going up and mortgage applications going down here. U.S. News and World Report just reported last week that initial mortgage applications dropped by 17% here. So we have all this going on here, and at the same time, we're still promised one to two more rate cuts before the year is out, either 25 basis points, which I think would be more likely, before the rate is out by the Federal Reserve Bank. And so all of this is going on in a supposedly booming economy, but it's only booming for the top 1% here, wealthy Americans here. And that's why they can afford to absorb this inflation, because they're not being affected by it as much as we are. And that's going to continue. But eventually, there's only so much money to go around. And eventually, in a consumer economy, meaning that 2/3 of our spending economy is based on spending, there's only so much spending going around. And so eventually, a lot of these stores that you see, not just in the malls or in the outlet malls or in the strip malls, they're going to be closing and consolidating to the big boys. So you're going to see a bunch of things that we saw in 1920s. The mergers and acquisitions are going to grow. We're also going to see in the next couple of months here a lot more layoffs going on in the private sector here. You're going to watch out. You're going to be seeing that even though the stock market is going to be surging toward 50,000, it's going to be crazy to see. But this is what we're going to be seeing because we're heading to a hyperinflation market, and on Wall Street and on Main Street, we're heading toward a place where it's going to be a tightening recession. They're not going to call it a recession until after the election year, probably 1 year after the election in 2026, and that's when they're going to start calling, hey, we're in a recession here, despite having the stock market go up to 45 or 50K on the Dow Jones. That's what we're going to be seeing. So be smart about your preps. Continue to prepare. Most importantly, be spiritually prepared, because this is a spiritual battle. It's not just economic and physical and everything. You can have all the preps, but if you don't have your mindset right spiritually with God, with friends, and neighbors and other things, you're not going to you're not going to get through it, because it's going to be a long-term marathon. Well, one thing may collapse one day, the next day something else may collapse, that you weren't expecting. And so we just got to endure until the end. Thank God, things have been have been held on this long with glue and everything. But eventually, as you know, the rubber meets the road, and the piper must be paid. So be blessed. I'll talk to you soon. Have a great weekend. Get some rest, relaxation with friends and family, and continue to be frugal and to be judicious with not only your funds, monetary funds, but with your mind as well. God bless. Talk to you soon.